I don't think there's that much monetary premium in gold now. Very few people, if anybody, are actually using it as money. Central banks are using it as a reserve asset. Demand for gold in private hands as an investment, which is also historically low right now, will go up. So you'll have more demand for investment gold by institutions, by individuals. And gold may in fact be remonetized. They have to trash gold. So there's been a lot of negative campaigning against gold. But obviously, if they issued bonds redeemable in gold, they could get a better interest rate than in dollars. But the obligations would be growing because they'd have to go buy the gold if they don't have it. I don't know what the reserves are. But yeah, I mean, we could pledge our gold reserves, but then we're probably going to have an audit. Some people know that the gold is there. I don't have to send you my gold. I don't have to physically hand it to you. I don't have to put it in a box and ship it to you. I just transfer instantly ownership of the token. And now the gold, it belongs to you. Because I think that Bitcoin has kind of overshadowed gold and stolen some of its thunder. And not even that, people have been buying Bitcoin instead of gold. But I think a lot of people haven't bought either. But one of the reasons they haven't bought gold is they thought, well, why gold? Gold's going to lose out to Bitcoin. So I'll look for some other inflation hedge. So I think once, the myth that Bitcoin is digital gold really dies, that's good for actual gold.
So you think some Bitcoin holders, maybe they suffered so much from, because last time we spoke, Bitcoin was around 90,000. Right now it's around 58,000. So you think some of these Bitcoin holders maybe are damaged, are hurt that much that they don't trust digital gold anymore, but they also, as a result, don't trust the original gold?
Yeah. And I think a lot of the marketing spin on Bitcoin has been, to denigrate gold and talk about all the problems with gold. Like, it's not really scarce. There's who knows how much there is. There's gold asteroids. You can never know if it's real or not. It's so easy to fake it. There's all kinds of stuff because they have to trash gold. So there's been a lot of, negative campaigning against gold. So that may have taken its toll on some potential buyers who don't see the real value.
Peter Schiff believes something is changing beneath the surface of the global financial system, and most investors still don't see it. While the world remains focused on Bitcoin, he argues that central banks are quietly preparing for a very different future centered on gold. He explains why gold could regain its monetary role, how blockchain might actually strengthen gold instead of replacing it, and why leveraged Bitcoin strategies could face serious risks if market conditions change. Whether you agree or disagree, these are arguments every investor should hear. Let's dive in. But first, let's see why Schiff believes gold's biggest move may still be ahead.
I hear people say, well, gold is useless. Gold, it's all, it's just all perception. I mean, people just think it has value, which, describes Bitcoin exactly, but it doesn't describe gold. I mean, people don't seem to understand. They think gold has no use, even though, we have all this gold jewelry, and, there's gold in consumer electronics. So everybody has gold and is using gold in their life, yet they don't realize how much value it has. It has properties that are very unique to gold that are not shared by other metals. And there are circumstances where you need gold, and you can't substitute anything else.
But how high is the monetary premium, you think? So let's say gold loses its monetary role and it's solely used for electronic purposes, for example, or industrial purposes, then the value would be a fraction of current value, right?
Well, it's hard to say what gold would be like if nobody wanted to use it as a store of value, because it's really hard to strip that store of value from gold, because it objectively is, right? Because gold is eternal. Gold doesn't decay. It doesn't rot. It doesn't, nothing happens to it. So by the definition of its own properties, it's a store of value. And even if you use gold, you can reuse it. It's not like once you've used it, you can't use it again. whatever you've done with it, you can melt it down and start over. And so it's like other commodities. I mean, if I buy wheat and I eat it, it's gone. I can't eat the same wheat again. If I use gas, I can't reuse it after I've burned it. But you can use gold over and over and over again, and it's never going to lose its value. And it's not like I mentioned, I can buy a new computer and, in a few years it's obsolete because they've got a better computer. So the one I bought loses value. When you buy gold, it doesn't lose any value. There's not a better gold that's going to be developed that's going to make your gold obsolete. So these are values that gold has that it's impossible to strip out. And again, when I own gold, the gold that I own can be used in 1,000 years by somebody else. So it's like gold represents the present value of an eternity of use cases. So you hold something in your hand. I mean, there's not many things that you have that will still be valuable in 100 years, let alone 1,000 years. But your gold will.
Yeah, I agree. And I think
they find a ship that was that sunk 600 years ago. The only thing that's probably of value is if they could find the gold that was there. The rest of it is all disintegrated into the sea.
No, I agree.
So it's hard to say. You can't really strip the store value aspect out of it. Now, I don't think there's that much monetary premium in gold now from monetary, because very few people, if anybody, are actually using it as money. So there's not much of a monetary premium beyond central banks. Now, central banks are using it as a reserve asset. And that's been growing recently. But historically, central banks have a very low percentage of their reserves in gold. So there isn't a big demand right now for the gold as a reserve asset. I think it's growing because central banks are underinvested in gold. They have too much fiat on their balance sheets. So I think that the demand for gold as a reserve from central banks is likely to go up, not down. And it's possible that demand for gold in private hands as an investment, which is also historically low right now, will go up. So you'll have more demand for investment gold by institutions, by individuals. And gold may, in fact, be remonetized. I think one of the things, ironically, that could be behind the move to remonetize gold is tokenization and blockchain, where you can take gold and tokenize it the way you can tokenize the dollar. And people are talking about, let's have stable coins. Let's use dollars on the blockchain because it's more efficient than a checking account or a bank wire or something like that. Well, you gain even more efficiency when you tokenize gold, because once I've tokenized gold, now gold is the perfect medium of exchange. It's very easy to buy and sell and settle in gold. I don't have to send you my gold. I don't have to physically hand it to you. I don't have to put it in a box and ship it to you. I just transfer instantly ownership of the token. And now the gold that belongs to you. The gold sitting in a vault in Switzerland that was mine is now yours. And so rather than gold losing its monetary premium, I think that gold is more likely to gain the monetary premium that it doesn't really have right now.
Right. And what do you think of Judy Shelton's plan for a gold bond to be issued on the 4th of July? Is that going to float?
Well, I don't think the U.S. is going to start issuing gold bonds. Not if it doesn't have to, because that's an admission that basically is a surrender. But obviously, if they issued bonds redeemable in gold, they could get a better interest rate than in dollars. But the obligations would be growing because they'd have to go buy the gold if they don't have it. I don't know what the reserves are. But yeah, I mean, we could pledge our gold reserves, but then we're probably going to have an audit so people know that the gold is there.
Right. And going back to Bitcoin, one of the divisive elements at the moment, I know a lot of Bitcoiners, they don't like it at all, is the strategy, formerly known as MicroStrategy. And I think you said the other day it should have been called micro instead of strategy. I found it very funny. But you've been very critical of strategy lately. And I know a lot of Bitcoiners would love to see that company go as well, to make Bitcoin pure again. But can you explain to me why you're so critical of them and why you believe they could fall into a death spiral in the end?
Well, strategy. I mean, Michael Saylor to me has always been the biggest bullshitter in crypto. The stuff he says is blatantly absurd. I mean, he's an intelligent guy, and so if you just listen to him talk, and he talks about all this sophisticated stuff, maybe it sounds like he knows what he's talking about, but beneath those big words is a bunch of BS. I mean, it's all nonsense, everything, especially when he got into Bitcoin credit and how he was creating credit. I mean, it's absolutely nuts. And he talks about Bitcoin as the most valuable property in the world. I'm like, well, how? What the hell could you do with it? He says Bitcoin, it's just like owning Manhattan real estate. It's going to go up like Manhattan real estate. And he doesn't understand that what gives Manhattan real estate value is the high rents that you can charge when you own it. You don't get paid anything for owning Bitcoin, so it's nonsense. But
Peter Schiff argues that gold still has surprisingly little monetary premium despite record prices. He believes central banks and private investors remain underexposed, leaving plenty of room for demand to grow if confidence in fiat currencies continues to weaken. He also says Bitcoin's digital gold narrative diverted many investors away from physical gold. If that narrative loses momentum, Schiff believes capital could gradually return to precious metals. One of his most interesting points is that technology may actually benefit gold. Instead of replacing it, tokenized gold could allow instant global transfers while keeping every token backed by physical metal, making gold easier to use than ever before. Schiff also warns against confusing financial engineering with real value creation. He argues that highly leveraged Bitcoin treasury companies depend on constant financing, and if that funding slows, forced selling could create significant downside pressure on Bitcoin itself. But according to Schiff, the biggest risk may still be ahead.
He got into these borrowing money and then issuing these preferred stocks. That's when he really, crossed the line, in my opinion, because then he went into outright fraud because he was marketing these highly risky products as if they were bank accounts. He described Stretch as a bank account with no worries and no volatility, where you get a 10% yield. And meanwhile, now if you bought it last month, you've already lost 20% of your principal, 25% of your principal. A lot of people are going to be suing him because they listened to him and that they lost money. But you've got a guy that has raised all this money. He's got a business. He's like, I'm a Bitcoin treasury company. That's not a business. You can't have a business where all you do is buy Bitcoin. What kind of business is that? Anybody could buy Bitcoin. I don't need strategy to do it for me. The only reason it seemed like he had a business was because people were dumb enough to overpay for his stock. So he's like, hey, I'm going to go buy Bitcoin. And his stock was trading for 150% double what the Bitcoin was worth. So he had a business of selling overpriced stock and then buying Bitcoin. But now the stock is worth less than the Bitcoin. So he's out of business. You can't sell, a dollar's worth of strategy stock and then go buy Bitcoin and then have less Bitcoin because now the Bitcoin was $1.50. So he doesn't have a business model anymore of selling overpriced stock because he's run out of idiots willing to overpay for his stock. He resorted to promising people high returns if they gave him money to buy Bitcoin. But now people realize that those returns are unsustainable. That's why right now, Stretch, the market yield on Stretch, even though he just raised the dividend yesterday to 12%, the yield is 15% because the price is falling, because people don't believe he can pay it, because he doesn't have an operating business. He doesn't generate any income. He just has a pile of Bitcoin. But what's that pile of Bitcoin worth? Well, not very much if he has to sell it. I think the main reason Bitcoin is close to 60,000 is because Strategy spent $60 billion buying it. If Strategy didn't buy all that Bitcoin, it wouldn't be anywhere near here. And it's not just Strategy's buying. A lot of other money was put into Bitcoin because of Strategy, because you got this big buyer that gives you some confidence to buy, because this guy's going to be there every week buying all this Bitcoin. He's kind of protecting you. But once he's out of the market, and now worse, Strategy has to sell Bitcoin. They got to sell Bitcoin to raise cash for their reserve. They got to sell Bitcoin to pay the interest and the dividends on their debt and preferred stock. And now he's talking about buying back Strategy stock, buying back the preferred. And in order to buy back the stock, he's got to sell the Bitcoin. But he's going to be selling the Bitcoin for a big loss compared to what he paid for. Now, of course, he's buying back the preferreds for less than he sold it for too. So, he makes some of it back. But overall, it's a huge negative. But meanwhile, it's going to put a lot of downward pressure on Bitcoin, which then puts downward pressure on Strategy shares. And it becomes this death spiral, because the lower Bitcoin goes, the more Bitcoin he has to sell to raise the money he needs. And then that pushes the price down even lower. He needs to sell even more. That pushes the yield up on Stretch. Now he needs to sell even more Bitcoin to pay the yield. I mean, it is a death spiral. That's why I've told people for a while, and I've said this for over a year, even if you like Bitcoin, even if you believe in it, like that in the long run, it's the new gold. If you buy into that, I don't, but if you do, my advice was get out of it now and don't buy it back until Strategy's out of business. Wait till he's bankrupt. Wait till all that Bitcoin is sold into the market and then buy. Because until then, you've got this massive seller overhanging the market. And look, Strategy is down 50. I mean, in the last, I guess, since October of last year, 8 months, Bitcoin is down 53%. During that time, Strategy bought 17 billion of Bitcoin. Yet the price still fell. So what's it going to do now when he's selling Bitcoin? And Bitcoin today is lower than it was in April of 2021. That was over 5 years ago. Bitcoin was 64,000 in April 2021. It's 59,000 now, barely. So if it couldn't go up with Strategy buying $60 billion worth, how's it going to go up now? I mean, I keep asking these Bitcoiners, who is going to replace Strategy? And there is a lot of other Bitcoin treasury companies that were formed to basically ride on his coattails. So they've already bought a bunch of Bitcoin. No more of these companies are going to be formed now. That the poster boy was a complete disaster. In fact, I think a lot of these other treasury companies, they're going to see their share prices down. They're going to be at big discounts. They're going to be under pressure to start selling their Bitcoin.
Peter Schiff's message is simple. Focus on long-term fundamentals instead of market hype. Whether he's right or wrong, his views raise important questions about gold, Bitcoin, and the future of money. What do you think? Is gold preparing for a major comeback, or will Bitcoin remain the dominant store of value? Let us know in the comments. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications for more updates on gold, silver, Bitcoin, and the global economy. Thanks for watching, and we'll see you in the next one.